Hi, everyone. I'm Seven Investing founder and CEO Simon Erickson. This afternoon, we'll be speaking about digital payments, and I'm extremely excited to introduce my guest. His name is Jeremy Almond. He is the founder and CEO of Paystand out in Scotts Valley, California. Jeremy, it's so nice to chat with you. Thanks for joining Seven Investing this morning.
Yeah, buddy. Happy Wednesday, Simon. Good to be here with you, man.
Well, as a way to introduce Paystand, let's first look at the 10,000 foot level, because something that you point out on your site is that even with the digital transformation going on right now, where every company is innovating and doing everything digitally, North America is still spending $18 trillion a year on checks, on paper checks to do business. And that's costing those businesses over $500 billion a year just in the handling of manually processing those checks. What is it that you started Paystand to do? What were your goals for the company from the start when you founded this business?
Yeah. Thanks, Simon. Yeah, absolutely. So as you mentioned, commercial payments, a lot of people talk about consumer payments, so much innovation going on in the consumer payment world, but commercial payments have been left behind. They have not entered the digital age. So I personally haven't used a check in a very, very long time, but yet companies are by and large still operating in a pre-internet economy. And so we started the company to say, hey, look, we need to see transformation change on the commercial side of payments. So Paystand is, simple way to think of Paystand is we are a business-to-business payment network. So imagine what Venmo does for consumers, making payments entirely digital, entirely modern. We do for commercial payments, large transactions between large enterprises. I think one thing I'd almost point out is, especially in today's day and age, right, where we're in a post-COVID kind of world, how does the enterprise operate where so much of the rest of their business is now digital in a work from home kind of economy, and yet they have to send people to the office to actually collect their money, right? And that's a safety concern. It's an operation concern. So how does the fuel that runs the business, the revenue side of their business, how do companies actually make that digital as well? And so that's what Paystand is focused on helping do.
Sure. Okay. So you're a B2B platform. So like I said, businesses doing business with other businesses. And the first tenet that you have on your site is kind of no paper, which is what we just addressed. We want to get away from checks. But another one is no fees. And, we've kind of gotten used to this infrastructure of credit cards, which are charging, a long list of fees. For every transaction, there's transaction fees, there's variable fees. But you guys have introduced a new concept called payments as a service. This seems very innovative when I took a look at it. Can you explain payments as a service and also the kinds of customers you think this might be right for?
Yeah. Thanks, Simon. So the way to think about payments as a service is a central part of our thesis is money is just becoming software, right? And so how do we think about software in a digital age? Well, on the personal side, as movies and videos became software, I use Netflix and I paid whatever, $10 a month, and I get to binge watch Stranger Things all day long, right? And so it's a subscription model. When I use Spotify, and I love it, it's one of my favorite bills I pay, because I used to have to buy like CDs way back in the old days. And now as music became digital, I get all the music in the world, all of the amazing artistry in the world for $10 a month. And it's an incredible delivery mechanism. And so, that has become sort of a subscription model. And so our view is money itself is becoming software. And so the way enterprises, our customers, are used to paying software, whether they're using Salesforce or Oracle or one of those kinds of software, is a subscription as well. And so we create great software that delivers sort of great services to the CFO to help get their money faster, cheaper, and more automated. And we do that with a business model called payments as a service. The unique thing there is most of the payment industry is, as you mentioned, Simon, it's a transactional business model. So when you use your credit card and you go buy a $5 cup of coffee, like I did this morning, Visa and MasterCard and the banks, they get a percentage of that. They get 2 or 3% typically. So if you know a company like a Square or Stripe, that's how their business model charges. Now, you might argue 3% on a $5 cup of coffee, that might be a reasonable amount of toll charge, so to speak, to use the network. But why do companies still live in a paper age? Why do companies still use paper checks for their commercial payments? Part of the reason our belief is because large transactions with companies that business-to-business organizations operate with, companies they've worked with for a decade. They have contract and invoice terms together. They're companies that have been really well established. Why would you pay a Visa, a MasterCard, a bank, let's say on $100,000 invoice with a company you worked with for a decade? Why would you pay them 3% or 2% or 1%? That seems fundamentally unfair, because all they're doing is moving ones and zeros around between banks. So our view is the business model of credit card transactions doesn't work on the commercial side. And so we've innovated by creating a new technology, by turning money software, and a new business model that creates alignment. And what that does is create basically bottom line savings for our customers, which are generally CFOs at mid to large enterprise. So we will oftentimes save them millions of dollars on fees that the banks would charge, whether it's wire fees, card fees, or other fees that they've incurred to basically just run their business.
And so when you're going to look to acquire a new customer, you go out, you talk to the CFO. Do you go? Is the acquisition strategy you just say, hey, how many transactions are you doing? You have a complex supply chain. You've been doing business with these other large organizations for years. Is it kind of a cost savings approach where you say, hey, we can save you this much money if you switch over using Paystand?
Well, it's a little bit of both. So it's a transformation conversation first and foremost, right? Which is, hey, probably if you're like most enterprise, you have a big chunk of your payments that are coming in through paper, and that causes you all this manual process problems, right? And it's hard to scale your business. You're throwing labor at it. You have to wait for your money to come in, right? This age-old adage, checks in the mail. And so they want to move digital. They oftentimes, when you talk about our sales strategy, they oftentimes have moved so much of the rest of their business, their DNA of their business digital. So they have an ERP, which is what runs their finance and operations. That's in the cloud. They have a CRM, their customer records. That's in the cloud. So there's already this wave of moving the rest of their business digital, but the revenue part isn't. So the first conversation for us is you need to move the revenue side digital so you can be strategic, you can grow. And then how do you pay for that? Well, the nice thing for us is there's a cost savings component. So we'll say, we'll cut your cost of receivables usually in half, 50% savings, whether that's through the actual fee savings that we're doing, right? By cutting their card costs, their wire costs, their bank costs. It's also across DSO, so they'll get their money faster, meaning that they have to borrow less, they become capital efficient, and they can scale more because we basically make the process automated. So whereas the companies are growing, we have some great enterprises and, for example, healthcare tech that are growing really, really quickly. And so they're growing so fast, how do they do more? How do they do more with the same amount of people? How can they supercharge their own finance team? So we help them do that as well. So across all three lines, we will help sort of transform the business and save them an enormous amount of money at the bottom line.
Sure thing, Jeremy. I want to change gears a little bit and talk about blockchains. You mentioned cloud, but I would like to talk about blockchains. We talked about a year ago, was the last time you and I got in touch. Yeah. And you had a quote at that time, which I wrote down, which I thought was pretty amazing. You said, blockchain is a new cloud. It's the cloud 2.0. Yep. And that stuck with me, by the way. I wrote that down and brought that to this interview here today. Yep. But, blockchains have kind of got a mixed reception from people when they think about it. Everyone hears Bitcoin and they were real excited because everyone and their grandma was buying Bitcoin. And then the volatility, of course, a lot of people lost money off of that too. But then you've kind of got this enterprise blockchain that's kind of being consumer side of that. Yeah. What's going on with blockchains today? What's the status of the industry right now?
Yeah, it's a great question. So notice that like a lot of the parts that I talked about with our business, what I said is money is becoming software. And then I talked about a lot of how that creates value for the organization. Now the magic secret sauce for Paystand is Paystand's technology is blockchain, right? But at the end of the day, the CFO, they care about like, are we going to help them get their money faster and more automated and save a bunch of money, right? It's up to us as technologists to actually make that magic happen. The magic though is partly it's blockchain. And the reason why is, like you said, Simon, our thesis on the technology is cloud was transformative to enterprise software because you were able to bring, whether it's your CRM software, your ERP software, you're able to deliver better, cheaper, faster, better experience to customers through cloud. But at the end of the day, no one cares that cloud is just cloud. It's ultimately, what does it do? So what are we at in the blockchain space? We're at a stage where a lot of people have talked about the technology for a few years now, right? And I believe we're at a stage where the technology is valid and mature and has massive advantages, but a few companies need to kind of put their heads down, build a great organization to prove in the market that it actually is a better experience and better value. The analogy I would give here is, when I got started in tech in the dot-com days, lots of people were talking about e-commerce. They said the way we were going to buy was going to change, right? We go into retail stores, but now, like, all of a sudden we're going to buy digitally. And in the 90s, there was lots of money flowing in the system. Everybody was talking about it. There's pets.com. I'm going to order my dog food online. But the reality was, like, you needed a couple companies to actually show, oh, I could buy books at a better process. I could have it be cheaper, faster, and more efficient, right? And so what did Amazon do? They kept their heads down. They built a great business that showed that the experience itself of buying was better. It wasn't just that the internet was magic. It enabled better experience. So our belief is blockchain is kind of at that stage right now where you need a few breakout companies, particularly in the enterprise side, that can say, like, look, we're going to use this to enable transformative experience. And so that's what we're focused on. I think there's a class of companies that's much bigger than just us that are saying it's the next wave, it's the next internet, it's the next cloud. And so we're going to kind of prove it.
Sure. And so we should make sure that when we hear blockchains, we're able to mentally kind of separate Bitcoin, cryptocurrencies, tokens, things like that from the fundamental technology, which is what you're using to enable your solution.
Indeed.
I believe that Paystand is built upon the Ethereum blockchain. And I wanted to ask you, I'm sure you looked at quite a few of those over the years. What led you to Ethereum, and how did you evaluate which one you wanted to build off of?
Yeah, it's a good question. So, you have in general this overall, I'd say, pools, right, in the blockchain world. You have a crypto pool, which is like the Bitcoins of the world, right? And then you have these private blockchains. And our point of view is you actually need a little bit of something in between. So what Ethereum does is quite interesting, is it uses something called smart contracts. Now, where do we think of the term contracts? We actually use this in our daily lives, right? As B2B companies, you have contracts and invoices that say, when I deliver goods and services, in 30 days, you're going to pay me when my truck, ships, my pallet of beverages or whatever. Like, so enterprises use contracts all day long. So then Ethereum is this notion that you can actually create an automatic contract, and you can create commercial terms that execute some kind of contract. Well, that actually sounds pretty similar to a B2B payment, doesn't it? So there's lots of use cases for smart contracts, but one of the most undeveloped use case that we thought was very important is, how do you match contracts and invoices to something automated and open? And so Ethereum's a really, really good use case for it. Now, one of the things Ethereum is called a public blockchain, meaning it's completely open. And Paystand's point of view is, we say three things. We say we're focused on no paper, no fees, and creating an open financial industry. And so we think it's important that financial services become more open. And so one of the reasons why we've invested in Ethereum is we believe that financial services can evolve more rapidly by using open technology. That's in contrast to there are a number of large organizations who are trying to build their own private blockchain. And our point of view is, if you build a private blockchain, you take some of the advantages that open blockchains enable. And so we wanted to support a more open industry. And so we've done a lot of work on how do you make that scalable? How do you make that secure? How do you make it private? How do you make it all of the things an enterprise needs to do? But we believe an open sort of blockchain built on smart contracts is we think one of the critical functions for enterprises as they look at what's next in cloud.
Sure thing. One of those big enterprises that's interested in blockchains is Facebook. We talked about Libra a couple of years ago. Facebook was really making some progress with that, and then it got some political pushback here recently. What is your take on social networks using blockchains as a payments solution? Yeah.
So I'd say one really interesting trend in general with social networks and tech companies in general is they're rethinking, what does banking mean? Right? So they're rethinking whether it's an Apple or Facebook, what does it mean to be able to have an account and a wallet and money movement. And so I think that's a larger trend happening in financial services on the consumer side, on the retail side. And then the really, really progressive ones are thinking, well, maybe just like the internet, we should have some kind of open standard. So instead of just trying to own and become a new bank, maybe there's a new model. And so I would say I applaud the Facebook team for thinking about not just trying to own their own sort of new bank, but create a blockchain so other participants can come. So that's the good. The thing I think, a lot of us are trying to thread a key needle is, how do you do that in an open way? When you have understandable concerns about privacy, security, authority, right? And I think the government's looked at this for good reasons. And so our point of view is, you need a balance. It's good to have companies looking at progressive blockchains. It's good to have innovation in financial services. It's better and best, we think, if you can enable that in an open way, as opposed to try to create sort of recreate the banking infrastructure, recreate sort of ownership, because I think there are reasonable privacy and security concerns around that.
And regulatory concerns too. Do you have an opinion on what would be necessary to get the regulators on board with blockchains? I mean, something is like Facebook's got 3 billion people now, which is almost 10 times the size of the United States population. Of course, there's an aspect of control the regulators want to have on the banking system, on all those systems that they have regulations for. Is there a way that the regulators could accept blockchains for something of that magnitude?
Yeah, so I think an interesting point on regulation is it's in everybody's incentive to have good actors on the system, right? So in payments, there's something called KYC, which means know your customer, because it's really important. We all want to ensure that money movement is happening in a legal way, right? So no one wants to fund terrorism or other sorts of sort of bad actors, whether it's state bad actors or otherwise. So I think everyone kind of conceptually would agree with that. So now the question is, how do you do that? And so I think a key way to bring regulators into the fold is say, look, regulators aren't scared of open. Regulators helped enable the internet. The government actually funded part of the early stages of the internet. And so, there are smart people in government who are open to figuring out how to enable blockchains. I think the area we can get common agreement around is, how do we ensure that the people that are entering the financial networks, whether they're open or they're private, are good actors? And so I think that's a really good common area. And the blockchain can actually help in that way. So one of the areas that the blockchain is at the emerging level working on is identity. So as a payment company, one of the things I have to think about is, when a new customer comes on board, who are they to ensure that they are good actors, right? They're not on a money laundering list. They're not on a on a terrorism watch list, those sorts of things. Well, I have to do that once. And then there are thousands of banks in the US that also have to do that every time they bring on a customer. Is there some way that we can have sort of shared validation to ensure that the identity in a private way, right, that doesn't sort of give access to identity that you don't want to, but just is able to validate, I'm okay, right? I'm not on some bad watch list. So I think there's some areas of actually common collaboration that the blockchain can enable, that regulators actually want to see, and companies would be in their best interest to participate with.
Sure. And is that your project, Blockchain as Surety? Is that related to the digital identity, actually confirming people on the internet are who they say that they are, know your customer, so to speak?
Yeah, exactly. It is it's an offshoot of that, which is how do we ensure that we talk about, there's a big company that for a long time was known as their slogan, don't be evil, right? But here's a funny thing about that. That sort of, it requires us to validate. How do we ensure someone's not being evil, right? And so one of the concepts blockchain is at least enables is this notion. How about can't be evil, right? And what I mean by can't be evil is if I put information in, how do I ensure that no one has changed it, right? How do I ensure that nobody is spoofing my identity? How do I ensure that maybe in a financial record, somebody hasn't changed it to fraudulently take money, right, behind the scenes? Companies all over the world are prone to that, right? And there's lots of really crazy stories about how that happens. And so blockchain is this way to ensure that that one has sort of fraudulently moved it. It's kind of fundamental to how blockchain works. And so a surety for us is something we internally use to ensure that our payments are secure, they're authenticated, they're validated, they get done on the blockchain. Even Paystand can't change them. A bad actor at Paystand can't mess with them. We've now opened that up so other companies all over the world can use it. We've put it through the Paces. We're one of the largest commercial use cases of the blockchain, and they can use it completely free of charge because we think it's just a good, it's our way to give back, to say, we want to make the system better, and everyone is incentivized to do that. And so go ahead and use some of the work that we've done. And so that's blockchain and surety is our version of that. And blockchain in general enables this sort of secure, fraud-proof identity validation. So.
Sure thing. Jeremy, just a couple more questions. You know, the world is business is going global all the time. Big customers are international now. They're doing business all over the place. I guess it seems like one of the big issues is foreign exchange rates and remittance fees, you know, moving money across borders, you know, and just kind of the fees that stack up with that. Have you seen that as a pain point or a use case for blockchains or for your own business?
Yeah, you know, it's a great point, Simon. It's you know, we talk about no paper, no fees, right? The no fee side, Paystand has been, I'd say the first 4 years of our business has been focused a lot on the transactional fee side, right? The bank fee side. But you could actually look at the global worse than that, because not only do you have sort of bank and transaction fees that are sort of unfair, but at the global level, you have FX fees, cross-border fees, remittance fees that are even worse, right? And that comes from not just sort of bad people in the financial system. It's just part of what happens when the system is not well connected. There is no standard. So in the US, we have a different payment infrastructure than we do in Europe. In Europe, there's a different payment infrastructure than in Asia. And so by definition, that means that people sort of exploit the sort of margin between those two systems. And so with that needing money overseas, I'm you know, or my family's from Mexico and they're sending back money or receiving money from someone in the US, and there's very high remittance costs. Or it's a business and I'm moving money over the supply chain, right? And they really have to think about, you know, their cost management on the supply chain. There's really huge opportunity to standardize that, use something open, and drive the costs down, right? And so we think blockchain, it's a huge area of emergence. There's some really interesting companies that are working on that on the consumer to consumer side. And there's not that many yet on the commercial side, but we think that's the next big area. And so you'll probably see some announcements from us in the future about it.
I will look forward to those, Jeremy. Now, I also know that you are a world traveler as well. Do you have a favorite country to visit or to vacation to?
Oh, man. Well, I would say one of the areas that I love personally is I love to spend time in Latin America. We have an office down there. Fintech in general in LATAM is really fun to see how that area is just exploding in general. And so I try to get down there as often as I can to spend time with the team, and I just love the culture. And, you know, it's so cool to see how for so long Silicon Valley and New York and a couple of hotspots have been like the concentration of tech. But one of the amazing things about globalization in general is like there's amazing innovation, amazing tech happening all over the world. And so that's just an area where I personally get so excited to see is, you know, where are the next Silicon Valleys? You know, where is the next innovation happening? And it could be from anyone, anywhere, in any part of the world. And that's just a really, really cool thing to see.
And that's my final question for you right there, Jeremy, is that innovation, that next innovation that's taking place. Our audience here at Seven Investing is mostly individual investors. We're interested in digital payments and what's going on out there. You obviously live this space every single day. What are a couple of things that you think we should be watching out there?
Yeah, well, you know, you're the expert in the space, not me, on advice. But here's what I would say. I think with the shift that's going on because of, you know, the new reality, there's two things that are very interesting that are happening in my world. One is what are the areas of digital transformation that have been taking time, but now in a kind of work from home digital world, right? There is a forcing function. So we're seeing digital transformation up in a lot of industries that were predominantly taking longer. So we have really amazing stories in healthcare companies and supply chain companies that were predominantly manual process that we're seeing move digital really fast. Processes that were going to take years are now moving in the course of weeks. So I would look at some certain industries that transformation was coming, but we're moving slow, is one area I think that there's a lot of innovation going to happen. And we're seeing it even in our own customer base. We're processing so much volume. We see really fascinating things in healthcare, supply chain, that sort of thing. The second area I would say that I would look at is there's some sleepy companies that are focused on, let's say, B2B cost savings and that sort of thing, that for quite some time, maybe they weren't as cool as some consumer company in the middle of, a very up economy. But all of a sudden, if you look at some of the stock around companies that are focused on cost savings, that are B2B focused, these are very consistent businesses that are SaaS businesses that every year you're just seeing them, put growth on the board. And so I would say that's another area that, if you look at those companies today, they're continuing to grow. Oftentimes they have CEOs that are focused very long-term out. And so, those are businesses we're watching very closely. At Paystand, we're still growing. We're still a private company, but we look and say, look, there's long-term 10 years of transformation. So we're betting on that. There's long-term opportunity in cloud and blockchain. We're betting on that. And then there's long-term opportunity to build a great company that's focused on helping drive cost savings, efficiency along the enterprise. And so we're focused on that. So.
Well, Jeremy, make sure you let me know when you do IPO and go public so that we can buy shares of your company. I think you're an incredibly innovative person, incredibly innovative company in an industry that really needs it very badly right now.
Appreciate it, Simon. Always appreciate time talking to you, man.
Yep. And thanks again to Jeremy Almond, CEO and founder of Paystand out in California. Really appreciate his time and all the things that his company is doing. And thank you for tuning in today. Once again, we are 7 Investing. We are here to empower you to invest in your future. We are 7 Investing.